Hey, hi, good morning, everyone.
Good morning, sir.
So, today is our last official session for QF 101. Before we actually start with the session and while people join in, right? So, I just wanted to know the feedback from you guys, right? So, what you felt about the session, what did you learn from it, right? So, at the start, what were your expectations from such a session? uh, you know what did you learn from it? Did you find it useful, right? And any feedback for the management team, if how should it could be, if any changes need to made, any feedback for me, right? If it could be made any better, right? So all those participants, I think pretty much, at least the ones which are present today, I have been seeing them right from the start of the sessions, right? uh, I would like to know your honest feedback, right? So, whatever expectations you started with from the session, have they been met, uh, or you know, you have discovered something new which you were not even expecting, or or some of your expectations which were part, which you had thought of, heard of before joining this session, and you thought that something could be improved, right? That this could have been structured better, or that could have been done a little differently, right? So floor open to the participants, right? So we'll just spend at least a couple of minutes and then we'll start with today's agenda. So people around the table.
So, I would like to say that the session was actually great and we learned a lot, and it was very well managed by the team with all the assignments and project. So, I feel that we learned a lot from this and it was a great session.
Yes. So from my end as well, right? So a great round of applause for the management team, right? So they really have done a good job. It's very difficult to coordinate with everyone, right? Even with me, to ensure that my timings, then they map with your timings, and things go well. So I think it takes a lot of effort. Okay, it might seem like uh, uh, to a third person, right, who is not arranging it, even for me or even for you, right? It might seem like very trivial thing, just to arrange a small teams call, and and maybe have certain sessions. They themselves had sessions and flyers, and they had notes and all, right? It might seem like a trivial exercise, but they have done a very commendable job to keep everybody on track. So to map me with you, with notes, projects, assignments, reminding people, a very good job, team, right? So the management team has done an absolutely good job. So Ayush, I think Shitej, uh, I might miss out a few names, but you have done a very good job, right? Because of which I, as a facilitator, get a platform to connect with people, right? And people get a one single stop shop place where they get good notes, assignments, projects, right? And in a very time bound manner of 4 weeks, we at least get to the conclusion of an exciting journey, right? So kudos to the management team, right? They have done a very good job. So anything else? So uh, anything else from anyone?
So from my side as well, because many things I knew beforehand, the topics
Yeah.
that were covered in the session lectures, but
Okay.
still I thought that let us join the session. And sir, whenever I used to join the session in any topic that I knew, you
Yeah.
taught something different, and those
Yeah.
different things were quite interesting. Like it was not intuitive at the beforehand, but when you
Yes.
used to teach, like yesterday also we got some strategy like that we can generate from that 30% stock and 70%. So it was done in every session. Like things
Right.
are quite intuitive, but it was not coming to my mind like this. We can think in this way as well. So
Yes.
the way you like enabled us to think, that is the most prominent part I learned from this session, that we need to think like out of the box to generate like to make use of the knowledge we have. So
Right,
this was the most interesting part for me, sir.
right, Chitij. On that part, what I would like to elaborate is, so, uh, like we have learned very, what I should say, very rigorous maths for our content, right? We have learned very, uh, we learned very deep statistical probabilistic concepts. We learned a lot of not so obvious things. Okay, so change of probability measures, and then going into a lot of deep stats and maths and all of that. That's not intuitive, or for that matter, you have learned very rigorous maths maybe as part of your background courses, maybe say engineering, or if you have taken BSc maths or stats or whatever, right? And this, I am sure, must have been over and on top of that, right? Slightly difficult. But if you go to your job, right, uh, directly, 90 to 95% of that will directly be not be used in your job. Okay, nobody is going to ask you to derive a Black-Scholes in your job. Nobody is going to ask you to change probability measure on your job and all of that. Okay, but the mathematical rigor what you build while doing these concepts uh, are expected to sharpen your intuition about certain things. Okay, nobody is going to ask you to do partial differential equations, but you should understand the intuition behind it. Okay, so something changes with a small amount. What is the impact of that on the other things? Okay, so not directly, but I have used partial differential equation in every single job which I have done. Okay, but if you ask anybody else, okay, doing the same job, they might not see partial differential equation there. Okay, they'll just see that you have taken difference of this with respect to that and all, right? But I see partial differential equations in that, and I do that because I have studied both partial differential equations and done the job. That's why I can relate to it. So whatever background which we have built, my suggestion is, some people take it as a mathematical rigor, right? That I'll go and practice equations again and again. I'll become perfect in those equations and all. That perfection, unless you become a PhD researcher and you work on something to develop something new, that really does not directly in the same vein comes as use as a use case for you. What comes in use case is the fact that you understood it and now you can apply it somewhere else. Okay, so that's the idea of it. So it's not really about how good you learned, whether it's binomial or how many ways you know how to price an option. What is important is option has a certain optionality. Okay, so tomorrow when you study a new product, for example, a swaption, which is an option on a swap. Okay, so all the concepts which you learn for an option, you directly inherit it for a swaption. And when some guy gives you a new project, okay, which is on a swaption, you don't start from zero. You have already have certain knowledge and you can derive value from that. Okay, and similarly in your most other concepts, right? So the derived value is higher than the actual value. So rather than actually, so a few people insist on knowing all these equations by heart as well. Few people don't, uh, which is each one to them. But what is important is you have taken away an intuition out of it, and that intuition you can explain it to somebody else. So that is really the crux part of it. So if you dismantle all the equations, and if you could take away intuition out of this lecture, then my point is every equation which you read also has an intuition behind it. So now it is your job to, whatever you read, okay, whatever textbook you read, whatever white paper you read, or anything you read, derive intuition out of it. And until you have fully understood it, you will never be able to derive intuition out of it. So always keep that thought process in mind, that the end goal of reading anything is not to mug up the facts or mug up equations or all of that. Okay, end goal has to be able to extract an intuition out of it and formulate in a single sentence or two sentences and then spell it out. Okay, so keep that thing in mind. Okay, so that's a good observation, Chitij.
Yes, sir.
Anybody else? Sanju, Sheikh, I think you have also been there.
Sir,
Yeah,
your
yeah.
sessions have been really helpful, and still I feel like there is a lot to learn. I still have to go through the videos and revise. Thank you very much for your content and teaching.
Sure, sure. So I think you can go on mute, Sanju. Yeah, it's echoing. So uh, I have so this was the very name of the course was Introduction to Quant Finance 101, right? So it was structured largely into the direction of introduction only. Okay, uh, actual quant finance course we have maybe not covered even 5 to 10% of it. Okay, so I hope everybody keeps that expectation at the end of the course. Okay, so by completing this course, if anything, you have just completed an introduction to something. Okay, so for example, you have a good novel, right? And there is a preface to that novel, which is not even a chapter one, right? It's a chapter zero. So chapter zero has simply an introduction. There is uh, a preface to it, just 1 or 2 pages, which gives you what you expect in the book, right? So that is what we have covered so far. We have not even started chapter one yet in Quant Finance. Okay, so just keep that thing in mind. Uh, the objective of this course is to make you confident to pick any good Quant Finance course and then build on top of that using this as a base. So we are yet nowhere close to a base. Uh, you should explore how to generate bases out of it. So to do that, right, let me share. Yeah, go ahead, Shreyas.
So at the end of the session, can you share like recommended courses or something that we can
Yes.
explore after this?
No, no, I'm doing it just now. So I'm just sharing my screen. Uh, because that is important, right? I don't want this to get lost in our course. It's okay even if we couldn't complete our course today, but uh, so I'll answer our questions related to books, related to career choices, related to courses, okay, which will help you expand your quant finance domain, right? So these are the books which I have followed and I have liked. There is the one which I really loved was Stochastic Calculus for Finance. Okay, uh, by uh, Steve Shreve, I think. So what happened was where I was working in one of the organizations, we had an external facilitator come and take a few sessions for us uh, in quant finance. So that guy, like, we solved every single exercise which is present in the book uh, by Steve Shreve. Okay. Uh, so I do have a soft copy, but due to copyright issues, I'm not sharing the actual soft copy of it with everyone, right? So I just request people to get the copy of the book. Uh, but let me just walk you through that. I mean, so one of the reasons why I recommend the book is not really for the I mean content also, because content they have explained it so beautifully, so I mean step by step they have mentioned it so well. So maybe stochastic part 1 itself is what you're looking for. So there is part 1 and part 2. Part 1 covers the discrete version of it. Okay, and part 2 covers the continuous version of it. Continuous version we covered much lesser in our course because I didn't want people to get bogged down with the mathematical part of it, right, and lose the intuition part of it. Once you are comfortable with the discrete version, then you should go for the continuous version. Okay, so this is how he starts, right? He starts with binomial pricing theory, then finite probability spaces, Lebesgue measure, and then general probability spaces, independence, sigma algebras, and all of that. Okay, so the reason why I like this book is for its exercises. Okay, so I did try to cover a few short things out of it, but what I really liked out of it is the exercises. So he has so many examples, right? So he has at least 20, 30, 40 examples solved and how to do them. And then at the end of it, you have the exercises, and then you have a few questions. Okay. So that these exercises really bring you up to the speed. Okay. So that is my suggestion. That is so, and it does not really cover. I mean, it very thoroughly covers your math oriented quant finance part for it. So it's really good book in that sense. And part 2, I think, goes deeper into a lot of other things. Let us just see that what all it does. Yeah, so it has general probability theory, information, Brownian motion, stochastic calculus, risk neutral pricing. So you have even exotic option pricing, right? So it's not like it's purely math book and it overlooks finance or derivatives part of it. So it goes into change of numerator, term structure model, jump processes. So from equity perspective, it kind of covers most of the things. Okay, and you have some very good questions at the end, which will really test your knowledge. So I don't know how many of you have studied the book Irodov, right? For physics, there was a book called Irodov, right, which has some very good high quality problems. This is finance equivalent of that book. Okay, so if you solve all the questions of these stochastic calculus for finance, okay, both versions, it's very unlikely that, I mean, you have pretty much covered 60 to 70% of any quant finance course. Okay, so my suggestion is if someone is considering to do quant finance in a very rigorous sense, uh, uh, before enrolling for such a course, just complete these two books. So this will give you a lot of confidence, okay, and it will give you a lot of heads up over other participants. Okay, and you never know, maybe even most of the people joining also have already done this. Okay, so uh, just a heads up on that. The third book, so these I would recommend if you have done a basic introductory course like what we have done. Okay, so after doing introductory course, so this is as you have seen, this is a daunting book, right? This is not a trivial book. So this takes a lot of effort. So you should have done some introductory course like we have done. And yeah, so there is another book which I think everybody uses here, right? So you have John C. Hull's book, which even does not require you to have done any introductory course. Okay, so in sequence I would suggest you first do John C. Hull fully, okay, all questions and all, do it honestly, okay. And only when you absolutely cannot find an answer to a thing, right, after having tried for 3-4 days, then you try to search or Google the answer or whatever, okay. But your first or few attempts have to be to, look at the book, content of the book, and solve the questions. And if you still can't solve it, then go back to the content, reread it, try to understand, and then try to solve it again. Try to do this iterative process many times, and if you still can't do it, that's when you try to seek out the solution outsides. Okay, now so John C. Hull is a book which you should start with. So this should be your first book, and complete all the chapters, session, questions, answers, assignments, everything whatever is given here within the text as well as end of the text. Complete this, then you're kind of ready for this. Okay. When you start this also, right, what you may encounter is you don't know a few things, and you need to study them separately. So go back to YouTube or any other place. Okay, go to Chat GPT. Okay, you ask questions to Chat GPT. I learned a lot from it. Okay, and for this course also I prepared a lot via Chat GPT. Okay, so ask ChatGPT questions, ask it numerical examples and how do I do it and all, until the intuition gets fully built and the understanding gets built. So John C. Hull is a first book. Then second level books are these. Okay. Then let me diversify around a bit. So like I said, we have just covered equity part of it, right? Uh, but there is an equally big valuable in terms of volume and in terms of number of jobs, right? You have interest rate world is a very big world. So there are you can go for there is a book on fixed income securities by Obuzi. Frank Fabuzi. So he has books on. So as a part of our course, we have not at all touched really fixed income securities. Okay, and fixed income securities is a very big animal in itself. So securities Fabuzi. Okay, so if I just want to look at the contents page. Yeah, the contents page. Yeah, features of fixed income securities. Yeah, but this really covers only fixed income securities, right? Which is this covers really bonds and all of that, right? So bonds, treasuries, and this covers, uh, derivatives on this, which are like asset-backed securities, mortgage securities, collateralized debt obligations, and agency pass-through securities and all. So these are all derivatives based on these, right? So these are derivatives on these. So these are the underlyings. Bonds, treasuries are the underlyings, and these are the derivatives on it. Okay. So what still this book misses is for example, OTC interest rate swaps and all of that, which I think is covered by John C. Hull. But I would suggest a specialized book for OTC interest rate derivatives. And let me just look up which are the good books for that. So OTC interest rate derivatives. So what I will now I'll suggest a different kind of class of material. Okay, so books can give you only so much. Okay, the second big thing which can give you is visit or read white papers from, okay, from regulators slash uh, uh, regulatory institutions. Okay, okay, so what kind of institutions are these? So one is Bank of International Settlements, BIS. Then second you have ISDA. Okay, they third you have Fed. They write very good white papers. Okay, for example, there is a very difficult concept called as, I mean, difficult in the sense slightly advanced concept in derivatives called as incomplete or complete markets. Okay, so there was a white paper published in 1992 by Federal Reserve. Okay, Federal Reserve US. Yes, see this one. This is written so well. Okay, and this is written by Fed. Okay, so introduction to complete markets, right? So it is explained so well. Okay, all of your things are present. Okay, so this is a glossary, right? So how do you define arbitrage? What is an arrow Debreu security? What is a bet? Then what is an incomplete market? Then complete market, linear combination, linear. So here you will see a very strong application of linear algebra. Okay, consistent bets, then efficient allocation, general equilibrium, hedge, redundant bets, scalar multiplier, state claim, definition of state claim and all, and they have done it so well. Okay, and this is, you will see a proper application of linear algebra to the world of options and derivatives, and then you will see how a lot of things come into picture. Okay, a lot of white papers will start with the assumption that markets are complete. Okay, and that's how things start. But what does it mean that what markets are complete? So to understand that, you have to read a good that word. Okay, what it means complete market in option sense. You have to read this full white paper to understand what it means to have complete markets. Okay, so my suggestion, so read white papers from uh, regulators, right? So you have Fed, and you have ISDA, you have BIS. So what we had googled earlier, right? Even before this, OTC, right? So here you have this by Federal Reserve. So you have this by Bank of International Settlements. Okay, so here they keep publishing a lot of white papers, right? So quarterly reviews they'll be publishing, right? And you can get to read what is happening in the markets and all of that. Okay, what is latest that is happening. Okay, and you'll get a lot of uh, insights also, right? So they keep writing things, and you can try to use this to understand things. Okay, then you have third. So the first set of thing is books, right? Second is reading white papers. So books help you build your basic concepts. White papers help you build what is latest that is happening in industry. Okay, so what is latest in industry, what's happening? Without being in industry, you can see what's happening in industry. Third way is to hear podcast. Okay, and here I'll suggest only one podcast, which is Quantcast. Okay, this is by risk.net. So if you go to, I think if you go to your Play Store on your mobile, if you go to Play Store, right, and there if you search for Quantcast, let me just search it right away. On my mobile, Quantcast. Do we have that? No, we don't have. Search for something called as soundtrack. Uh, Soundtrack. No. Okay, let us just Google it up. Okay, so if you have to, so there is something called as Quantcast. Podcast. Yeah. Risk.net podcast. So yes, this SoundCloud, sorry, soundtrack, I was wrongly saying. So on SoundCloud you have risk.net podcasts, and all of these are free podcasts. But the advantage is, you know, the people who are talking here are quants. Okay, so here actual quants who work for some big firms, hedge funds and all, right? Hedge fund, or you know, big banks. Okay, they're quants means, I mean, head of the something, right? So head of uh, energy, equity. Okay, quants, they'll come and then they'll talk about a white paper which they have written, and they'll explain it in simple terms, easy terms. Okay, I have referred it to a lot and I have learned a lot from it. It's available on Google Play and, you know, App Store and all, and you can read a lot, you can get to learn a lot. Okay, so here you will get to learn a lot about uh, so risk.net. Yes, it is called as Quantcast. Yes, and then you have these people talking in, right? So it's a great place to learn. And what, so you hear this Quantcast, and within this, whatever you don't understand, right, keep making notes of it. Okay, so I heard 50 new words in this Quantcast, but I did not understand maybe all 50 of them. So I'll make a list of all these 50, then I'll Google, I'll read, and then I'll come back and then I'll understand this Quantcast again. So although that Quantcast might be half an hour, 1 hour kind of podcast, okay, I mean podcast, it will take you nothing short of 1 week, at least initially, to re-listen it again and again to understand those words and come back and then understand that podcast. Okay, it is that in depth, generally how it's written. Okay, so uh, so that's about the way you should go in terms of preparing. Okay, and in terms of courses, right, what courses you have, I'll classify the courses. So you have, you can have the first course of uh, so these are courses, right? I mean, these are kind of by courses, what I mean is not full-time learning. This is uh, just certification courses or something like that, right? So not full learning, these are just certifications. Okay, so here what I mean are the first one which comes to my mind is CQF, Certified Quant Finance, but it's fairly expensive. Okay, fairly expensive. Uh, what I would suggest is if you get into a firm which is like investment bank and all, okay, a lot of firms have a policy of reimbursing your education, okay, if it is relevant. So firm by firm basis, some firms, uh, reimburse all cost of your education. Okay, so they reimburse all of this cost. I have seen my few friends do CQF after they have joined an organizations which allow these certifications. So they join, they first pay out. So you have to first pay out of your pocket for certifications, and if you clear that certification, then your firm will pay you back for clearing this certification. So CQF, which I have in mind. Then you have World Quant University, which has a good course in financial engineering, and it is completely free of cost. Uh, so this is the second extreme of world, but I have not taken either of these courses, so I'll not be able to compare which is better and which is not really good or up to the mark. But uh, I would say that it's good from certification purposes, right? Both of these, right? So uh, these are the courses, and finally, in terms of educations, right? So I think if you can go to US for MFE, uh, then I think you have equal in Switzerland, where you can do similar to MFE slash QF, right? Uh, Ecole Polytechnic. Then you have, I think something is there in Paris also. I'm forgetting the name. Then in India, I'm not sure it's IIT Kanpur or Kharagpur, but it offers a course. Again, I can't vouch for
IIT
uh,
Kanpur, sir.
Kanpur.
E-Masters, I believe.
Yeah, again, I'm not sure what e-masters mean. I mean, whether or not it's a full-time course or what. Okay, so I'm not sure of the detail. But there is a course by my alumni college, right? So I have studied from IFMR. So IFMR has a full-time 2 year, not 2 year yet. Like it's a PGDM program, so it is more from CAT-based selection. But first year you'll be learning general management, and second year you'd be learning quant finance in depth. But it is just 1 year of that course, so you have to keep that in mind. Then you have another course from Madras School of Economics, which has 2 year quant finance. Quant finance course. So also you'll get a lot to learn from here. Okay. There is a certification called IIQF. Sorry, I missed that out. But I mean, a few of my friends who did that course found that course to be elementary. Like my friends, they had some industry experience and all, and they found that with respect to their expectations, it was, it was not that involved and in detail. Okay, so that was their uh, uh, experience. Okay, and not really. Again, I have not done that, so I'm not sure. Okay. Also, okay, don't. So these are. So you will feel like you are in terms of knowledge and skills. Let us say you are here, right? These courses will be very steep jump in your learning curve. Okay, so this will jump you up and keep you at this level. Okay, at the same time, okay, although this might be the case, like you know things which are used on your job are again completely different. Okay, so once you start doing your job again, you have to learn something completely different. Okay, so again you start from here, and again you have something else to learn, and you have to do it. Okay, so having talked to a lot of people in US also and all, right? What I have observed is, they say that despite the fact that we have done financial engineering or QF or whatever from US, the kind of content which is required on job is completely different, related to this but different. Okay, and for that we have to start learning again and studying again and all of that. Okay, but then which is part and parcel of life. Okay, so keep that caveat in mind, that despite that fact you will do, let us say, financial engineering even from US, right? It will still be academic oriented. Okay, and industry has still, it's still going in a little different direction, and you need to keep talking to alumni who work in industry to keep course correcting, right, as to what you should learn and how you should learn it. Okay, so any questions so far? I know it took some time,
Sir,
but I
there is
think
one more course called Quantitative, right? E
uh,
EPAT.
maybe recently, if not, let me just check. I have heard of it. Uh, You will keep getting a lot of courses going forward, given the.
They've been in the market since 2017, actually.
Okay. So I think they are all oriented towards algorithmic trading, right? And not really, right. They're oriented towards algorithmic trading. Not so the mainstream of a QF course. I think you can go on mute, Sanju. Yeah. So the mainstream of a QF or MFE course, right? Like I said, and also I have structured deliberately our course that way, okay, in terms of weightages. So 3/4 of your course will be around, so it's not really around trading, okay, or investing, okay. 3/4, 1/4 of the course was around all of this, okay. So algorithmic trading and investing and all of that, but 3/4 of your course is oriented around derivatives. Oh, okay. And derivatives are not assets, okay. They are not for making money, they are for hedging, okay. So they are managing risk instruments, they are not really assets. So these are risk management instruments. So this course orientation is towards trading, okay, and hence it is restricted to one portion of MFE. Okay, so if you have interest or if your career choice is in the direction of trading, then it's a very good. I mean, I don't know if it's good enough or not, but I mean, it looks like it curates you for moving in that direction. Okay, so yeah, anything else from anyone?
Thank you, sir, for spending valuable time to educate us.
Yeah,
Is there any freelancing opportunities in Quant Finance, sir?
freelancing opportunities. I like freelancing. I don't know. Okay, I've not heard, at least based out of India, anyone doing any freelancing in Quant Finance. People do internships, which might be paid or unpaid, but I have not heard anyone doing it on freelancing basis, because any Quant Finance project is I mean, it's likely to be a longer term commitment than a week or a month, right? So, for example, if you can imagine, right? If you, even if as an intern, if you have helped a firm build a strategy, right, you have to execute it, backtest it, validate it, okay? Even if building takes 1 week or a month, you need to be associated with the firm until at least quite some time to be able to do that, right? So in terms of ad hoc opportunities, right? So it is about a collection of deliveries, and that kind of goes against the grain of freelancing. Okay, it's not an individual independent work that I just do it myself and deliver. Okay, it is an interdependent work. So I have not heard of any freelancing opportunities. Ramakrishna.
Sir, any places or companies you recommend to apply for internships?
Yes. So that depends on, you have to make an important career decision regarding quant finance. Like I said, quant finance is largely divided into two parts: investing slash trading, and then you have risk management. So first decide where you want to be. So if you have decided risk management, then you should target investment banks. Okay. uh, and if you have to target this, you should target hedge funds and AMCs and so on and so forth. Okay, so you should look for investment opportunities. I mean, in internship opportunities accordingly, keeping that thing in mind that this is what I want to do. Again, internship is a good time to explore. Let us say you don't even have the answer to the question whether you want to be here or there. Okay, so let us say you are in second year of uh, your course, and you have a 4 year course. Okay, so for a couple of months do an internship here, and then for another couple of months do it here. Okay, and then you will see the difference of the two, and then you will come to know what you should choose as a career. So use your internship opportunities also to find out what suits you, what you like, what will help you in career, and what else. Okay.
Like, which one do you think is, I mean, is it risk management or trading investing, like a lifelong career without having to retire at 60 or whatever, Which one you think is uh, no retirement, uh, you know, uh, job?
So that's really tricky to answer. Okay, in the sense that, okay, I mean, I'll in that sense I'll say both, and I'll give respective reasons for that. Okay, so risk management as a job you can do only until the age of 60, but post 60 what you can do is you can work as a consultant. Okay, for individual hedge funds or investment banks, or collaborate with regulators. Okay, so there are consultation papers and all which are required, right? So if you go to BIS, okay, so BIS consultation papers, right? So so regulators have to come up with lot of consultation papers and all of that, right? So for that they require contributors. Okay, so you can contribute to this and all, and so this can be your career, right? So it's a different way to look at things, that what you will be doing after 60 and not get retired. Okay, whereas in investing, for example, if you have enough capital and post 60, post your financial independence or retirement at job of 60, you can think of making money by doing trading yourself or investing. Okay, so both have their own careers post 60, yeah, but in a different way or in a different domain. Okay, so the cycles of risk management and trading, the way they move, similarly this your job profiles will move, right? So this is purely my perception. Okay, this has this is no industry standard. This is my perception. Okay, so so this is how risk management moves. Okay, so it starts from here like this. So this is your drift rate of Brownian motion, right? So your career moves pretty much like this, okay, this in risk management. Okay, so constant growth, relative or whatever, and all of that. Okay, uh, so in terms of investing, right, it might start from here, right? And even if it might have higher average growth rate, I don't know, again, that's debatable always. But it definitely, if this is the case, that you have a certain delta positive here, then your life will likely be like this in in investing sense. Okay, if you are in a hedge fund and all. Okay, so if you are ready for these okay, some people have, so such alternative large level of changes. Okay, for some people this is exciting and this is what they want in life. Okay, for them this kind of job is good. Some people are looking for more secured kind of things and less volatility and all of that. For them this kind of job is kind of good. Okay, and so both have their own pros and cons. Okay, both have different nature, different objectives, and both have their own pros and cons. Nothing is I mean, nothing single-handedly trumps over the other. Okay, but both of them coexist with their own nature.
But to do any of it, you have to know both um, in terms
I
of
would say
knowledge.
at a later stage, yes. So to begin with, you have to gain, it takes a lot of time and effort to gain your own domain knowledge, right? So let us say you're saying that you're in risk management. To get that knowledge itself, it will take you at least 5 plus years or 7 plus years. Okay, so people won't be expecting you to know something from the other domain or field until that stage. Because if you don't know your stuff well, okay, then it's a challenge to try to learn something beyond your this. Okay, and then after you go to a much higher level where you're trying to manage a team which involves both, then you need to know both of it. Okay, but first you need to be good or clear with whatever you're doing and whatever team you're placed in. Anything else from anyone?
Uh, Sir, I would like to say something about my experience during these 4 weeks.
Sure, sure.
So,
Go ahead.
at the beginning, I faces some network issue, but after I have clear about my voice, can you tell me?
Yes, yes, yes. I can hear you,
So,
Jyoti.
before the course, I have not expected that type of regarding course, but when I was prepared for the midterm evaluation, I have revised things of the course of the first 2 weeks. And after the evaluation, I have interest in that field. Before this course, I mostly go with the developer side. But after this code, I have another side, and this is my one of the career change. So I can go with the research side because of you and management team. Management team will also management. You have also manager that type of assignments, lecture, notebooks, and many other things. So I am very thankful you and as well as management team to provide and learn for me this from these sessions Quantitative Finance 101. And when we talk about IIT, so mostly talk about Bombay, Delhi, Kanpur, but this is not true because other IITs also working fine as much as that top IITs, and I am very happy and and thank you for the management team because everyone sees the front screen but not the behind. So I am
Exactly.
very grateful to you and as well as management. Thank you so much.
Great, great, Jaydeep. So as a matter of this course, if it brings any positive change in anybody's life, right? Maybe you are a second year student, who is yet to choose a course. Maybe you are a lateral, right, who has a few years of experience, and now you want to decide what career path you want to take, right? And now you get to make what do I say, an informed decision, right? And if that informed decision is also to the fact that it feels that quant finance is too daunting, okay, and I want to explore something else, okay, I don't even want to explore this, even if this is your conclusion at the end of this course, you have saved yourself a few years of hard work and quite a lot of money and time. So time, money and energy you have saved yourself in terms of investing in this course. If you have come to the correct conclusion that I don't want to pursue it, okay, that is also a very valuable conclusion, okay. So if it has, you have come to the conclusion that I want to do it, also great, okay. For example, you see here these, right? So a lot of job openings for quant developers, okay. So we have been discussing on and off what quant developer does, right? So let us see if they have any job description. Okay, so this is what you do: develop core market risk systems, including calculation and aggregation of sensitivities, stress scenarios, and VAR. Okay, you'll cover topic. The work will cover multiple asset classes, involve wide variety of derivatives and instruments. Work with the clients of the library, whether it be working on quants, on model development, business user with applications, and so on. A C++ expert, so build out a DevOps automation, include automate, build, automate, test, document, and release process. So this is a very typical quant developer role. Okay, so this requires 80% of your background from coding and 20 to 30% background from quant finance. Okay, that should do the job. Okay, so this is how a typical job looks like. Okay, so this is from JP Morgan. Okay, so what are they expecting? So this is an asset management. Okay, REST APIs. See, CFA and FRM preferred. So these are kind of certifications. They are okay with CQF. They will be over the board to so design, develop, code, test, debug, and document, and so on and so forth. Okay, so pretty much what we have done as part of our assignments, right? With most of them being, so I see most of the requirements in Python also, right? Which is why I insisted in people doing their assignments in Python. Okay, so okay, not really descriptive. Okay, so some clients have specific requirements that you should know a particular kind of asset class, which is like FX option and all of that. Some clients have specific requirements that, I mean, generic requirements that you should know most of the asset classes or something like that. Okay, so you have this job from Millennium. Okay, I think Millennium is a hedge fund. Millennium. Yeah, it's a hedge fund, right? Millennium Management. It's a multi-strategy hedge fund, and a lot of these jobs have now started coming up in Bangalore. I mean, India. I mean, that's what I was more interested in. So earlier you would get most of these jobs based out of either London or US and all of that, right? So now you're getting a lot of these opportunities based out of India itself, and not much the need to relocate. Okay. So you have this, you have quant developer here. Three years of Java, finance, trading, and all of that. Okay, so this is how it looks like. Okay, so if you're planning to switch your career from what should I say, a developer to a niche developer, right? So developer particularly in quant and all, so you will have a lot of opportunities. Okay, so cross asset quant libraries, simulation environments, production systems for FX, FI, equities, and extend the existing cross-asset Python libraries. Okay, so looking at these things, so Python looks like a central uh, development for a lot of job openings. Right? C++, Python, right? Okay, so this is a brief background about career opportunities. And point well taken, Jaydeep. So thanks. Anything else from anyone? Yeah, go ahead, Anurag.
Good morning, sir.
Good morning.
Is there any use of Kalman filter also in this domain?
Yes, I mean, you know what, Anurag, like literally any concept you pick, you will find an application here. Okay. So whether you pick it from, including even from biology, from geology, I don't know of history, but definitely even all of these you'll find. Okay,
Yes, yeah,
you'll find from computer science, information theory, okay, and all right. So Kalman filter and all you will find the application. Okay, the only thing that I want to sound as a word of caution is uh, so instead of finding concepts which are within or outside the field of finance or quant finance and then trying to see whether or not that can be applied, you should look at things from the other way around. Okay, so whatever you're doing, is there something which cannot be done until Kalman filter is brought into picture? Okay, or is there a problem statement which can particularly be well solved by using Kalman filter? Okay, if that is the case, then bring that into the picture. Okay, if not, then you're good enough not bringing it, right? I hope you get what I'm saying, Anurag.
yeah, sir. Sir, is I want to share one resource from YouTube only. There is
Okay,
one YouTube channel that is Quantopian.
okay,
And that is good, I think, source because I have watched a 5 day workshop of IIT Madras, Bachelor Science in Data Science. So
okay,
one guy is from that Alpaca Invest brokerage firm. So
right,
that guy lectured 5 day workshop. So they told those sources. So
right,
I attended those 5 days workshop. So
okay,
today is my live. I am watching live you today only. I have watched your 4 videos on YouTube,
okay.
sir. But after ninth video, it is not coming on YouTube, sir. Yeah, sir. Because today I am watching you live, and I am from electrical branch, electrical and electronics.
Okay,
I have passed already, and I worked as an embedded developer. But I
okay,
want to I have interest in little bit of algorithmic trading plus using of quant in this. So that's why I want to get your other last week lectures. After ninth lecture, it is not coming on YouTube, sir.
sure, sure.
Anurag,
So
we already
definitely,
uploaded the YouTube. You can see it through the playlist.
yes.
Sir, but after ninth it is not there.
So
After
Anurag,
ninth
I think
lecture.
yeah, team will help you out with that. Okay, so team is working on it. It takes some time. Okay, they have to record it, then they have to upload it and all. Right, sizes are something sometimes big and all. But by the time we have finished all of this course and maybe give them at least one more week, so by that time they would have uploaded all the videos. Okay, so just give them some time. They are in the middle
Okay,
of a lot
okay,
of
sir.
things. Right? So they have recorded it. I have seen that they do keep recording on in most of the sessions. So recording is already there. It's just matter of uploading it, and they will upload it. Just have a little patience. Okay.
Sir, one more question, sir. Sir,
Yeah.
There is maximum amalgamation of data science with quant also for trading purpose.
For trading, yes.
Yeah, because in data science, if we want to trade, like suppose, so option is used for hedging for intraday or for or for momentum trading or momentum investment purpose also. So we can use data science with that quant also by using Python.
That brings, that's a good question. Okay. And let me come back to answer that question, but answer will be a
Sir,
little more elaborate than that.
Sir,
Okay.
sir, one question, one more I have doubt. I have done my BTech from electrical and electronics, but my sister is currently doing a Bachelor of Science from Data Science IIT Madras program. So
Okay.
through that point, I am connecting dot and I connected dot to quantitative finance. Later, I realized that I got interest in that field, sir. So please elaborate that question also, sir. Both two questions.
No, no. So what do you want elaboration on? On the second part, do you want on data science versus quant
Ha,
finance?
Data science with the amalgamation of quant to getting a better version of trading for intraday or some momentum
Yes.
trading, momentum
Okay.
investing. Yes, sir.
Okay. Okay.
Because I am asking this question because I have watched one guy from YouTube channel. There is A to Z trading, that is Vivek Bajaj.
Okay.
Stock Edge. The company is a Stock Edge. I have watched all lectures of that guy. So through
Okay.
that I got concept of quantitative finance also.
Okay.
Yes, sir.
Okay. So let us take all these questions step by step. Okay. And I think this is
Yes.
also of interest to others. Okay. So I'll just elaborate a little bit on this. I hope you can see my screen, right?
Thank you,
Uh,
sir.
yeah, yeah, sure, Anurag. So, so yesterday I think we saw one of the strategies, right? Which was, you have a certain set of stocks which have beta. Clear this up. Yeah. So yesterday we saw a few set of strategies where we have beta. So you have stocks with beta less than one, okay, and you have strategies with beta greater than one, and like you have this observation, but you want to statistically test it, okay. That is when you go to data science and okay, pick up certain things which statistically prove whether this works or not, okay. And to elaborate this with an example, okay, of what I mean, okay, of how data science comes in handy. I'll put up a simple problem statement before everyone, okay, and let us think through how data science helps us solve this question, okay. So the question is this, okay, there was a physicist, okay, who used to drink tea with his wife, okay. He used to drink tea, okay. What used to happen was uh, his wife used to say that each time what you do while making the tea is, okay, you pour the boiled I mean tea leaves boiled in water first, okay, and then you add milk to it, okay. So this is tea leaves boiled, okay. First you do this and then you add milk to it. What she said was, I don't like it that way. What you should do is first you should add milk, okay, and then you should add tea boiled water, okay, then mix them together and then add sugar and all of that and then give it to me, okay. But he being a physicist, what he said was, I do this, in the kitchen, right? Not in front of you. Whether I put this first and then milk, or whether I put milk first and then this, okay. there is no way for you to tell a drinker to tell, because after everything has been mixed, you're getting it to drink, right? So there is no way for you to tell whether this happened first or that happened first. Okay, whereas his wife was adamant that no, I can tell the difference. Okay, so as a physicist, okay, how should you, how to test wife's hypothesis? Okay, the hypothesis is this, that she can differentiate between whether first milk was put or first boiled tea water, okay, whether that was put. Okay, so this is the hypothesis. So how should he check this hypothesis? Anyone? Anyone on this call, you can think of how you could test this hypothesis, whether this was done first or this was done first. I mean, statistically, of course.
I think first done first.
Sorry, can you repeat that?
Sir, according to the density, how much thick we need the tea
So,
or
so
better
like I
tea.
said, right? No, you are going in direction of physics, right? I'm just asking statistically, how do you prove it? Question is, wife is saying that she can tell a difference between whether first milk was put in or whether first boiled water was put in. And what the husband claims is, after you have mixed two liquids, right? There is no way to tell whether this was put in first or that was put in first.
Sir, data of means data of making tea from since past. How how she making tea according to the past data.
Yeah, but what? How do you use past data?
Sir, sir for that case, the husband should know already and watching how she was making tea.
No.
So in
So
that scenario,
okay, you are not watching anything. Okay, so this is a husband. Wait. This is a husband. Okay, and this is a kitchen. Okay, he prepares tea here. Okay, and he serves tea to his wife in hall, in a different room or in a garden. Okay, so he's preparing tea here. Okay, so he can choose to put first. So this is your container. Okay, so here you can first choose to put milk, or first he can choose to put this tea water. Okay, so sometimes he puts milk first, sometimes he put tea water first. Okay, and then he brings the tea to his wife. Okay, so does his wife know what did the husband put first? Wife has no visibility, right? What did he do? Wife just sees the tea in front of her, which is this tea water plus milk. That's all she sees. Okay. But wife says that I can tell you for sure whether you put this first or this first by just tasting it, the tea. Okay. And husband says that it is impossible to tell because whether I put tea in water or water, I mean milk in this tea water or tea water in milk, both at the end of the day, both have just mixed together, right? So you should not be able to tell any difference. Okay. And he wants to test whether wife is, telling truth or not. So statistically, how do we check that? So statistically, how will you check is, okay, this is okay, if let us say wife is just guessing each time, okay, and she's really not predicting, then what happens? She's guessing with the probability of, okay, what she has to guess? She has to guess that whether it is first tea, then milk, or first milk, then tea. She can, there are only two guesses to make, okay, and she's random. If she's randomly guessing, then our probability of being right is, it's simply 1 by 2, right? Now, if he performs this experiment again and again, right? If he does this experiment 100 times, okay, and if wife predicts it correctly less than 50% of times, it means she's just guessing it, okay. But if she's able to tell it 70% of times, 80% of times, 90% of times, that whether milk was put first or whether tea was put first, it means she's actually being able to differentiate between the taste, right? In the same vein, you pick in terms of stocks, you pick any criteria. Okay, yesterday we picked one criteria, beta less than one stocks outperform beta greater than one stocks. Okay, so this was our observation. Okay, now you need to use data science to do hypothesis testing, okay, to find whether this hypothesis is true or not, okay, or this was just fluke or one-off observation. I mean, this happened luckily or this is a trend. For that you need data science, for that you need hypothesis testing. Okay, so if you're sitting in a trading environment and your hypothesis is this, that every Monday start of the day market falls, this is your hypothesis, market falls. Okay, now you go to data science. Okay, so this is your observation in finance, then you go to data science and you do hypothesis testing if this is true. How do you do hypothesis testing? You do ANOVA, analysis of variances. So intraday return variances versus between days return variances. Okay, if that is higher, between day variances are higher than intraday variances, that means it makes a difference whether it is a Monday, Tuesday, Wednesday, or Thursday. Okay, and you can find whether it falls on Monday and all of that. Okay, statistically speaking, right? And then you can decide whether or not you want to buy, sell, or whatever. And if you can decide on underlying, you can also decide on the derivatives of it, right? So if you feel that underlying is going to fall, it also means that in derivatives you can go and buy a put option, right? So if underlying is going to fall, you go and buy a put option, right? So what is your basis of hypothesis testing? It can be anything, right? Maybe you have observed in the data set that whenever Fed reserves, whenever the crude oil movement is greater than 3%, next in the next 1 month, in next 1 month, you know, Indian market falls by at least 2%. Okay, so conditioned upon, so probability of stock price movement conditioned upon an event happening, xn is equal to something. Okay, you find this probability, okay, which is something, right? So 2%, 3%, 5%, whatever, or 95%. Okay, but you have to do hypothesis testing to find whether this was one of instance, or you have to find whether this was luck or this is a trend. Okay, so this actually happened or this is just one lucky instance. Okay, or this always happens. And if it happens again and again, okay, that is when you go ahead and take position in your underlying. Okay, so the very heart of algorithmic trading is scavenging through the data and trying to find the patterns, okay, which fit a certain narrative. Okay, for example, elections happen India every 4 years, so this is a very obvious thing that it just happens, right? So in every election year, okay, if you find a pattern that Indian markets perform well, or they just fall or anything like that, okay, then you have found a particular pattern, then you have to do hypothesis testing, then then you have to say with p-value of greater than 95% and all, okay, your observation is right. Okay, and then you go ahead and take position in the markets. Okay, but you have to remember that in algorithmic trading everything is conditioned upon something, okay, upon a certain event happening, upon certain thing happening. Okay, for example, you see that if stock market has been rising up, so every time the market has risen for last 5 months, okay, it always falls on the next month. Okay, this is your observation. Then you go ahead and do a statistical testing for it. Okay, so for this you have to identify patterns. For example, yesterday we saw one of the patterns, right? Whenever volatility is really low, then in the next few months you expect a good rise in stocks, right? So that is one of the observation. But looking at one of the observation, you cannot say that it holds always, right? Then you have to take 30 years of data, 40 years of data, and then see each time whenever volatility was as low as 10%, what happened in the next 1 month or 2 month. Okay, and collect all these observations. Okay, and then take average of that and then plot distribution and then say that on an average it goes up by so and so much. Okay, and that is why it works or it doesn't. Okay, so this is where data science comes, kind of merges with quant finance. Okay, so data science gives you insights about the underlying, about the movement, volatility, or something like that, and derivatives gives you a platform to make use of that information. Okay, for example, there are some useless information, and I mean you might put in certain effort to find that out, but you can't do anything about it. Okay, for example, you find pattern on social media, okay, of what people do and all of that. Okay, but so Facebook in their capacity they can use that information to increase their revenue, sell products, show ads or something like that. Okay, but you who is sitting outside that firm and you are trying to find some patterns in social media using social media data analytics, for you personally that information is of very less use, correct? But if you find any such patterns within financial data, within stock data and all of that, the platform where you make money out of this extracted information is stock market, derivatives market, maybe your quant knowledge. Okay, so this is a platform to make use of the knowledge which you extract out from the data using data science. Okay, I hope I answered your question, Anurag.
Sir, one question more. Suppose like there is a Nifty 50.
Yeah,
Okay, according to Nifty 50, we have seen that Nifty 50 top companies are there,
right.
right? We have data of 20 years, last 20 years. In that 20 years, there is a mm, difference created. Like what companies earlier in 2000 or 2010, the same company is not in Nifty 50 today.
Okay.
Okay, so how can we judge according to that data that the prediction we are making through that 20 years of data of Nifty 50 according with the help of statistics and whatever machine learning. So how can we predict that is the data is the result we are going to get according to the prediction that a stock is going in momentum. So how can we predict if the data is lost like the
No, that's not.
company
No, that's not how it works. Okay, the way it works is Nifty 50 is a Nifty 50 is a defined, predefined collection of set of stocks based on a certain rule. Okay, so even if the set has changed, okay, but uh, okay, the set was based on a certain rule. The rule is of free float market cap. Okay, so top free float market cap companies in India are part of Nifty 50. Okay, you always want to keep that part constant in your analysis. Okay, so although let us say we calculate beta of your current portfolio to be 0.50, okay, but this beta is based on current set of Nifty. I mean, one year. This is 1 year beta, right? So 1 year, let us say the set of stocks was this. So it does not mean that 10 year back. Okay, 10 year back also, is it reasonable to expect your beta would have been zero point 0.5 because 10 year back the stocks were completely different and all, but that is immaterial or irrelevant. Okay, it is simply a strategy which is based on a collection of certain set of stocks in a certain weight of their market capitalizations, and that is what you would want. Okay, so what is fixed here is that collection. I mean, what is fixed here is a rule based on which the set of stocks are decided. Since that holds, okay, your analysis should be on the basis of that and not really whether or not it has constant stocks, constant set of stocks or not. Okay.
sir can we do back testing with the help of merger of quant and technical and fundamental in program in Python or in a Pine script in that trading view? Can we make code on that so we can find a good momentum stocks?
Yes, like I said, right, what you can do is you're performing back testing, okay, but don't mix and match. Okay, what you should do is do back testing independently using fundamental analysis, okay, and get to a certain conclusion. Okay, so there is a certain conclusion that this is what you think. Okay, then independently do a backtest analysis using technical. Okay, and get to a certain conclusion. Okay, and independently do it using quant. Okay, and get to a conclusion. Okay, and so for example the conclusion set of your fundamental analysis backtesting is this Venn diagram. Okay, so this Venn diagram. Okay, then due to your technical analysis you had this Venn diagram. Okay, and then due to quant analysis you ended up with this Venn diagram. Okay, then of course whatever comes in this part it overlaps with all three of them, right? So this is higher probability of confirmation that this is what is going to happen, if that is what you're asking. Okay, but what happens generally is if same person is doing all three things, right, he is likely to be he is likely to suffer from confirmation bias. So this is a psychology thing. What happens is the moment he does fundamental analysis and reaches a certain set of conclusion, he starts he starts the second analysis trying to spend effort to prove this conclusion itself, that whether or not he finds this conclusion in this data. Okay, and like they say in data science, right, if you torture the data enough it will confess to anything. Okay, so if you ask the data to prove this as the conclusion one already, okay, which has been proved using fundamental approach, you start the analysis of technical trying to prove that conclusion one works, then you will end up with the fact that conclusion one works. Okay, so what happens is your Venn diagram starts becoming like this. So this was earlier fundamental, technical, and quant. So because you did fundamental like this, and you're trying to find whether it was true or not, which you'll find. So your technical becomes like this. Okay, and then your quant becomes like this. Okay, so this is why it is important that either three different independent people do these things. Okay, or keep this caveat in mind that you could become affected by confirmation bias, that you already have a conclusion and you just want to confirm that. Okay, which is a wrong way to look at data, right? Technical has its own strength. Use technical to find its own independent conclusions, and then find what conclusion, what are overlaps between conclusion one and conclusion two, rather than just trying to confirm that whether or not conclusion one, which is drawn from fundamental, is right using technical or using quant. Okay, I hope it helps.
Sir, one more question. Sir, as we know that our macroeconomics conditions and GDPs are also growing, and according to 2000, some that we are saying that India is going to be developed in 2047, 2047. Sir, according to that perspective, I think there is a good momentum in a stock market also. So I want to know, sir, how can I learn the things so I can utilize the opportunity and I can I utilize that opportunity, sir. So from where the sources can I
So
learn
I've
all
I
these
have
things?
already shared the list of books, right? List of books, podcasts,
Yes,
in terms of material, right? I have shared it already.
yes, sir.
Yeah.
Sir, one more question. We are also listening that the quantum computing and quantum computers are there, and it is going to be a future in future in many industries, and there is so much there is so much leveraging other industries also, and in particular finance they are leveraging so much. So they are going to leveraging finance also. So how quantum computer are used, and how quantum algorithms can be used in there, sir, in finance world?
Okay, so for that, right? I mean, very good question, right? And I'm kind of pasting a link, right? And pasting this link itself in our chat.
Because there is a government policy also for quantum programming and making a quantum algorithm on circ. So how can we use the that programming and programming tool to making a quant better or making a stock picking better, that thing, sir?
Yes, so like I said, right? So this there is this white paper on option pricing using quantum computers. Okay, so you can go through this, and this gives you a perspective of how quantum computing can be used to perform basic option pricing and all of that. Okay, I hope you'll find this paper a good read, and this will also clear up a lot of things for you. Okay, the name of the paper is option pricing using quantum computers. It was written by, it was a quant research team from JP Morgan and IBM quantum computer quant research team from Zurich. So they have collaborated together and they have put in a good white paper on the same. I hope you get a chance to go through it. Okay, Anurag?
Yes, sir.
Yeah. Thanks for all those good questions. I think people on the call also must have either had similar kind of questions, or if not, you would have at least got to learn of at least a few new things out of it. Anybody else? Any questions? Yeah,
Sir,
Ramakrishna.
can you suggest any resource for learning general trading, like fundamental analysis or technical analysis?
Yeah, so fundamental, I would suggest, it's more time consuming. Okay. I mean, in terms of doing it on ad hoc basis, right? In terms of certain short course or all that, I would suggest against that because you'll have to build a lot of basics first. Okay. So you should, uh, so my suggestion is you should first start learning building basics on what is balance sheet, income statement, and all of that. Okay, so you have class 11th and 12th textbooks of CBSC related to cost accountancy and all of that, right? You should try to go through that because CBSC generally structures the textbooks in a good, palatable, readable way. So that will give you an understanding of what are the basics which are there in cost accountancy and all, right? So how does a balance sheet look like? What's the working capital? What are short-term, long-term assets, liabilities, and all of that, right? And then you'll understand those things step by step, and from there you can jump on to a lot of things. Okay, yeah, there's a very good resource. Okay, Ramakrishna, I think I just got reminded of him. So there is a resource called as Ashwath Damodaran. Okay, so you should pretty much follow him. I think he has a lot of online resource content and all of that, right? Uh, and yeah, so this is Musings on Markets. This is by Ashwath Damodaran. So you can follow, I think his, uh, so he has absolutely great, how to study, how to do fundamental analysis and all of that. So he's an absolute go-to person to study it. So how to value anything and all. So he refers to everything from fundamental analysis, right? So individual assets, owners, startups, okay, how to do cash flow analysis, pricing, and all of that. Okay. So you should he has also certificate classes and also for fundamental analysis, I would suggest Ashwath Damodaran. Okay, maybe his blogs, his white papers, his videos, and what all and what not. Okay, anything from Ashwath Damodaran is a great thing to study for fundamental analysis. Okay, technical. I have not personally done so much of technical or come across, but I think you will find quite a lot of resource on YouTube. Okay, I don't vouch for any particular person or book or video or YouTube channel for that. Okay, so you need to ask around a little for technical, but for fundamental, this is pretty much I think what you have, which should be sufficient. Okay, so if you follow what he has, like 80 to 90% of things should get covered here itself. Anything else? Yeah. Any, Anything else by anyone? Any questions? Okay, let us take a short 10 minutes break and let us reconnect. Yes, Anurag, we will take your question, but let us take a short 10 minutes break and let us meet back at 12:25. Okay, and we'll continue our discussions from there. Okay.
Okay, sir.
Yeah. I'll just go on mute. Let's reconvene back at 12:25. Yeah. Hey, hi everyone. So let's reconvene back, right? So maybe Anurag, you were kind of asking a question before we jumped out of the call. Yeah, go ahead, Anurag.
As we know that for technical analysis there is a inbuilt library there that is TA library is there for inbuilt and we can use that library in Python also or in PineScript. So sir, for quant also is there any library or something is there which is already used?
Yes, for everything you have a library in Python. You just need to Google it up. Okay. So I think there is a quantlib library for Python, and you'll also find enough libraries, including and up to even for fundamental analysis, if you provide the data in a certain structure. Okay, so there is almost nothing that you don't have a library for. You have a library for everything, and you can pretty much use ChatGPT to even write an integrated script which uses all these three of them together and build a backtesting strategy out of it directly in ChatGPT, and not really sit and code it out.
So sir, can you suggest some some libraries sources
For what? For
for quant and fundamental?
for fundamental, you mean?
Fundamental and quant.
Okay, so you have ChatGPT here, right? Let us ask. Suggest some good Python libraries for fundamental analysis and quant libraries. Okay, so TLib is of course for, so equivalent of that you have Zipline by Quantopia, and then you have Quantlib, which I just mentioned, right? Then you have Pifolio, Alpha Vantage, Beautiful Soup for scraping data, Yahoo Finance, Quandl, and all of these, right? So I hope this helps, Anurag. You can do a quick ChatGPT search and you can get all this list of libraries.
Sir, is it good enough to use such that libraries for making strategies for in Indian markets, or we have to read some advanced papers like you suggested?
So reading papers is always going to be a good add-on, okay? And as far as markets is concerned, strategy has got less to do with markets, okay? So you are going to look into the data and use the library to test your hypothesis whether certain things works or not, okay? You are going to check whether that thing works or not based on the data and not whether the data is from Indian market or US market or whatever market, right? So if it works, it works. If it doesn't, it doesn't. Right? So your data will tell that whether it works or not. Anything else? Any other question from anyone?
Sir, I have a question.
Yeah, yeah. Go ahead.
After getting some good knowledge about quantitative finance, can we do trading? Will it be profitable using those strategies?
If you ask me personally, no. I mean, forget quant finance. You study anything. consistently making money out of trading is not a practically feasible approach. Okay. Why is that? Most traders don't make money, uh, and whatever make money, it's very difficult to say that they are making money because of some knowledge or skill, uh, or or luck. Okay, it's very difficult to attribute it to whether the gains came from here or from here. Okay. uh, that being the case, so for example, if that were the case, right, then all the Nobel laureates who invented all these fields, for example, good guys, right? You have Paul Wilmot, who is doing this quant finance course. Then you have some organizers of CQF, right? People who write CQF material, take CQF exams, and all of that. Okay, those people would have started these as the jobs, right? I mean, these as full-time jobs. Uh, the thing that I'll tell is when it comes to making money, whether either even through via investing or via trading, okay. I mean, this was a very simple. I think everybody understands this, but people kind of almost refuse to believe it. But if there were a strategy which works, okay. So Ramakrishna, let us say you through your hard work, you look through the data, you do the analysis, and you come up with a strategy. Will you share your strategy via book with everyone?
Yes, that's we need to think about it.
No, I'm asking. Will you share? No, right? Nobody shares. Nobody will share because it takes a lot of effort to find such a thing. So if there are books which are written in the market which say that if you do this, you'll earn money, okay? Or this is how traders make money. This is a momentum strategy. To see that if 300, if 30-day moving average goes away 300, 200 moving day average, then it's going to go up and all of that. If that strategy works, then that guy who is suggesting that strategy would have rather used that strategy and made money rather than selling book out of telling that this strategy works and making money out of that book, right? Logically speaking, that's how that doesn't make sense. Okay, so point being, you should read the any book which tells you about making money. You should always read with a pinch of salt that either that strategy has now stopped working or the fact that strategy never worked. Okay, so let us say you spend time, money, and effort to invent a new strategy, so you make money out of that strategy. Then after that strategy stops working, you write a book and then make further money out of that book. Okay, that, and then anybody which will check that strategy on the data set which you provide, it always works on that data set, right? Which is why it made money for you. So anything which works, nobody will publish it. Okay, so there are, let us say there are infinite invisible strategies which make money, but they are not published anywhere. They are not available Google anywhere, right? They are not available in public domain, but they exist. So if you expect that that knowledge will be given to you for free, it's unreasonable to expect, right? So you will have to discover that knowledge or find that knowledge and all of that. What you can do is whatever books are published which say that this is how trading should be done or investing should be done, you should try to understand how someone builds a framework. Okay, what is their line of thinking? How do they come up with ideas? How do they test whether or not their idea works? Okay, which is for which I yesterday had shared that white paper on volatility managed portfolio, right? So a certain guy who wants to use quant knowledge to make money out of it, okay, he observed the things and all, and he felt that in low volatility scenarios you should have lower exposure to the market, and in high volatility scenarios you should have highest exposure. After formulating this strategy, he very rigorously compares that strategy with lot of things which are available in the market already, momentum, mean reversion, and everything. and then he finally statistically concludes that his strategy is superior to others. That is the amount of effort which goes behind a particular strategy, right? So you should understand what you have to learn from these white papers, what you have to learn from books is not the strategy. Okay. So they say, right, if you give me a fish, I'll eat for a day. If you teach me fishing, then I'll eat for the rest of my life. You don't have to get that fish from that book. Okay, don't read a book to learn a strategy and make money out of it. Learn a book to understand the the effort that goes behind or logic that goes behind creating a framework, and that framework is finally called as a strategy. Okay, understand how a strategy is developed in the first place. Okay, how does a person come to the conclusion that he should start thinking in this direction of a strategy building? Okay, try to learn that line of thinking. After you have learned that, you develop your own strategy. Okay, so because you can only make money out of the strategy which has been developed by you. Okay, you cannot make money by a strategy which has been developed by someone else, because you are not the only one who is reading that strategy. Okay, there are millions of people who are reading that book, and if everybody starts using that particular strategy, that strategy starts has an alpha decay, and it no longer is an alpha, because alpha is something which is exclusive to you. If everybody knows, then that's not an alpha, right? So after reading these books, this knowledge and all of that, then your journey, if you want to make it into the direction of trading and all of that, right, then your journey really starts. From there, you will be able to make money in trading if you are able to come up with a strategy plus backtest it that it works very rigorously. And you also have to keep in mind that, let us say you stumble upon a strategy which works. Okay, you are not going to be able to hold on to that strategy for the rest of your life. Okay, it's not like an IP development that once you develop it, you patent it to your name and rest of the life you keep getting royalty. That's not how it works, because there will be other people in the market who will be trying to search for the strategy. Eventually they will land up on the strategy, on your strategy as well. Okay, so and then somebody else will also land up on your strategy. They will start eating alpha out of your strategy, and then your strategy's alpha starts going down and it becomes zero. Okay, and then everybody else again has to start uh, finding the new strategy. Okay, I hope people know how Bitcoin works, right? Bitcoin is a mathematical question where people are solving it, and whoever solves it first gets a Bitcoin and all of that, right? So it is something similar to that. Okay, there is a particular question everybody's trying to solve, and the first one who solves it gets a Bitcoin. And the moment that question is solved, that question is done, right? Everybody has to start looking for the next question and needs to start solving the next question again. Okay, to earn the next Bitcoin. Similarly, in terms of trading, everybody is trying to find that alpha strategy which makes money for them. After you have found that alpha strategy, your job is not like done for rest of your life. Only up to next 2 months, 3 months, 6 months, until everybody discovers that strategy works. After that, your strategy is dead. You have to start searching for that strategy again. Maybe it takes 6 months to search a strategy, 2 3 months to backtest it, formulate it. It takes 1 year to find a strategy, and it takes 2 to 3 months for that strategy to dissipate back. So within that 2 to 3 months, you have to make enough money so that you survive for next 1 year and all of that. Okay. And with advent of chat GPT, with higher, faster computing, trading, right? What is happening is this alpha decay is happening even faster. Okay. So your alpha decay is happening really, really fast. That is the rate at which your strategy stops making money is alpha decay, which is high, and your ability to find new alpha making strategy, okay, the rate of finding that strategy becomes low. Okay, so you need to go through more data than last time. Okay, so okay, in year 2024 you spent 9 months to find a strategy which has a possibility of making alpha. In 2024 you spend 9 months of research to find one strategy that makes an alpha. In 2025 it is going to be even more difficult. You will have to spend 12 months to find your first strategy that makes alpha. In 2026, because of computing power, everything goes up, you will have to spend 15 months, 18 months, whatever, to come up with one strategy that makes alpha. And after you have found the strategy in 2024, let us say you could milk that alpha or extract money out of that alpha for 2 months. Okay, this will start going down. This will go 1 month. This will go 15 days. Right. So I hope you understand. How more impractical it will keep getting to make money out of basic normal trading. I hope everybody understands the behind the scenes what is happening to say that why is it difficult to say that or why it happens that 99% of traders don't make money.
Understood, sir.
So percent traders don't make money. You'll find a lot of reasons, but the idea is that 95% of day traders lose money. Do you know these guys, Black, Scholes, and Merton, whose model we keep reading? These guys themselves had started a hedge fund called as LTCM. Okay, and they themselves could never make money out of it. That was it's a good test case and read all of that. Okay, so those guys who invented all the formulas on which $1 trillion industry stands, that could never make money for itself. Okay. So it profit from combination of academics, quantitative models, traders, market judgment, execution capability, sophisticated investors. You had everyone, right? But see, also on the board were the Nobel Prize winning economist Myron Scholes and Robert Merton, as well as the David Mullins, former chairman from the Federal Reserve, who quit his job to become a partner at LTCM. So these credentials convinced so and so forth. Okay. So Nobel Prize winning economist Myron Scholes and Robert Merton, out of that Black Scholes Merton, these are the other two guys. They were on the board of the member of this LTCM. It was founded by a bond trader from Salman Brothers, okay, which is John Meriwether, okay, and so on and so forth, okay. But I mean, it, that also kind of didn't work out. This is not to discourage. This is just to be an eye opener that, given that you have read quite few things, does not guarantee success. Okay, success has a lot other invisible constraints and problems which might still make you fail in that sense. Anybody else? Any questions? Nothing else? Okay, so we'll pretty much if there is nothing else, then we'll pretty much kind of conclude. Or yeah, go ahead, Anurag.
Sir, there is 5,000 plus stocks in the stock market right now, I think. So
In Bombay
how?
Stock Exchange. Yes.
Yeah, so how can a person or like a middle class person suppose to know that that particular stock is going in a momentum for some long time, suppose 1 month or 4 month or 5 month. So from
Okay.
how can a person evaluate or find a particular stock is good enough, so that stock is going to return good amount of money, and how a person get to know that when he have to come out from that stock, or
Okay. So Anurag, if I knew answer to that question, right, I wouldn't be doing a job. Okay, as simple as that. Okay, point is nobody knows. Okay, nobody knows for sure. Okay, which stock to pick, when to pick, when it will start going up, and when it will start falling down, so you should sell it. Okay, if you knew answer to only these three questions, which stock to pick, when to buy, and when to sell, nobody would ever be doing a job. Okay, so what you can do is you can know only in probabilistic sense. Okay, so out of the universe of 5,000 stocks and whatever analysis you do, okay, you can never narrow down on this stock I should buy on this date, that so this is the date, how to find this date, this is the date, how to find this date, okay, and make money out of it and get out of it. Okay, there is no science that tells you this. Okay, and for that matter, okay, the full derivatives world stands on the premise of efficient market hypothesis, that with available information, all the information has been already priced into where the stock is, and any extra movement is going to come from any extra information which is going to come. Okay, indirectly what you're trying to ask me is, how do I know what information is going to come in the market? Okay, and I don't think there exists any model for that. Okay, so point is you can know only in probabilistic sense that this is a bottom or this is a top. Okay, so with a certain set of probability you can say that it might actually, so when you're standing here, okay, this might, the you have different kinds of bottom projections. So certain probabilities say it might bottom here. Okay, certain probabilities will say this might bottom here, something might say here, somebody might say here, somebody might say this itself is the bottom, it will simply go from here. Okay, so you will have a probability model which will tell you that where with a certain set of probabilities where the bottom is. Okay, similarly it goes for top, and for that what kind of things we have to use, I think we just discussed, right? You can use you have to do hypothesis testing and all, right? You have to find previous historical patterns, whenever it was at this level, what were the interest rates and what were all of those things, and based on the changes of interest rate where it went up, crude oil, you can use macroeconomics, you can use firm specific information, you can use hundreds of other information to come up with various probability estimates. But at the end of the day, you will know things at the most in probabilistic sense and not really in deterministic sense. Okay, so there is no exact science to tell where is the bottom of the stock, which stock to pick out of it, and that has got really nothing to do with middle class or rich or all of that, right? All you need is a computer. You need to be able to scavenge through the data as fast as possible, and if you can do it, you can just do it. Okay. Okay, Anurag, just one quick question. Okay, if you were to know, okay, when to invest, okay, when to sell and when to buy, would you have told it to everyone that this is how you should do it?
no sir.
Exactly. So, like for example, even if I know, do you think I would tell you? No, right? No, I mean, let me even further clarify it, right? If someone promises to you that, okay, that guy knows, okay, how to do that, and he's ready to teach you for a certain fee or not even for a fee, then believe that that guy is faking. Okay, anybody who knows such a strategy will spend all of his time trying to make money out of that strategy and not really spend time teaching to everyone. Okay, I mean, there in world there might exist people who might know such strategy, but all of them are busy making money and they are not busy really explaining people how to do that. Okay, so that's really how the world works. Okay, anything else from anyone? So I have a quant community group as well, okay, which I have created for continuous learning. All those people who are interested, right? You can be a part of that group. What I'll do, Kshitij, is I'll share the link of that community group with you, but
Yes, sir.
please share it with people who are part of the project groups. Okay,
Okay,
not
sir. Sure.
not with the 300 plus group which we already have, right? Because
Sure,
maybe
sir.
not all are serious participants, right? So do share it with those people who are doing the projects. Those are 30 odd people, right? I
Yes,
guess.
sir. Yes, sir. 30 people, sir.
Yes. So do share with them. Mm. Sorry, Kshitij, is your name Drax on the
Yes,
group?
sir. Yes, sir. Yes, sir. Sir, I will just
Okay.
say a hi to you, sir.
Okay. Okay. I'll just send you the community link of quant professionals. So here what we do is, it's a place where I have a lot of subgroups created for continuous learning, then any job opportunities, any coding related questions and all, right? So HFT and all. So you can contribute to this group positively, or you can take from this group, what you feel is a good takeaway for you. Okay. So let me just uh, chats. Yeah, you have just ping me and let me send you the community link. Okay, so do forward it to those people who are seriously interested in pursuing quant finance, and you can join me there. Okay, so I'll be available on that quant community group, and we will have a lot of sessions and all. Okay, and you can post questions. So apart from me, there will be a lot of experienced folks on that within India plus US who can answer a lot of your queries, and they will help you grow professionally. Okay, they'll help you build a good professional confidence network, and they'll help you improve in that direction. Okay, so I hope that helps. Okay. Anything else that you're expecting from this course and which is left for now? I don't think, right? So I have shared the resources, materials, books, a continuous learning quant community. Anything else? Yeah, go ahead. Anu.
Sir, I am not in that group. Can I be a part of that group, sir?
Yes, I have shared it with Kshitij. Okay, and he'll shortly share with the participants.
Yeah, thank you so much, sir.
Sure. Happy to help. Yeah, Sanju, I think you are also saying something.
Nothing much, sir. Thank you very much, and I'll also be a part of that group.
Sure. He'll shortly share with everyone. Okay, so nice joining with all of you. So you were one of the most excited bunch, right? Which I have seen a lot of questions, people from diverse backgrounds. And for me also, particularly for these sessions, I had bought this writing pad and all so that I could deliver sessions online. It was a learning experience for me as well, to interact with people and to manage expectations. So for me also, it was a great learning experience. I'll also learn from it how to deliver sessions better next time and all. So yeah, nice catching up with all of you, and let's stay connected. I'll also share my LinkedIn profile shortly on the group. If people have missed connecting with me, then you can connect back again. Okay. Yeah. So I think we'll conclude this call and we'll continue our discussions on WhatsApp chat. Okay.
Thank you, sir.
Yeah. Thanks everyone. Nice
Thanks a
connecting
lot,
with
sir.
you.
Thank you, sir, for your precious time.
Sure. Happy to help.